Welcome back to my channel. My name is Oge. My channel is a growing channel and we're sharing values that I know many traders out there are going to actually grab and use in their trading journey to actually improve their trading lifestyle and their trading. So I hope you guys enjoy the value. You can actually practice it on your trading view or in your way of trading. You can try it actually to see if it works for you, and I hope you gain some values in this video and content I share for you. Please, again, my name is Oge, and stay tuned for the new topic. So today's topic is the rule of the unicorn strategy, but I want to show you the rule of the unicorn strategy. Now, the unicorn strategy entails of a breaker block and a fair value gap. Now, how do you know this? It's very easy. If you have watched my breaker block strategy, you know how it works or how breaker block is. So we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now the low has to be taken out. Now, what makes this a unicorn strategy? What makes this a unicorn strategy is we all have lows here before the high was broken. Am I correct? Yes, I am. Before the high was broken, right? Now, you have to wait for the low to be broken, which is here. You have to wait for the low to be broken. We all created a low before an high was created. This is a lower low, lower high. We have to wait for the recent low to be broken, which is here. You can see it very well here. Now we mark this as our breaker block, which is the last bearish candle before the impulse move for a bullish momentum. Now, how do you take in your trade for a breaker block? Sorry. For a breaker block, you look for the closest fair value gap. The closest fair value gap is where you take your entry for a unicorn strategy. The closest fair value gap, which is this, you know what a fair value gap is, right? The closest fair value gap to a breaker block, that is what is being called your unicorn entry. Setting your TP and your stop loss for your entry, depending on how you want to do it. Now we go into the chart. This is the first example I can see here. If you can see very well, there's a breaker block here. I'm trying to find the closest breaker block for you. Okay, let me find one for you that is a breaker block. Now you can see here, there was a breaker block here. You can see it, right? There was a shift in market structure there and a breaker block. Did it come out with the body? Yes, it did. Did it come out? Okay. And you can check in here as the last bullish candle, but it's a minor one. I have to go to a lower time frame, and it came in here, but that's not a good example. Let me find you something nice and sweet. Okay, I'm trying to find you a very good breaker block. Okay, now you can see here there was a breaker block around here. You can see it, right? There was a breaker block around here. This is a breaker block because there was a break of structure. Now the closest fair value gap is this one to the breaker block, and you can see it came in there and it took it in. So just go around and practice it. That's a breaker block with a fair value gap, the closest one to the fair value gap, and that is your amazing entry. Just go around, look for a breaker block when market shifted structure, and come in there and do your analysis. You can see there's a shift in market structure here. Can you see that there? And you can see a fair value gap. So this is what they call the unicorn strategy. Very easy peasy and nice. Don't forget to subscribe my channel, tap on subscription link, and I hope you gain some value in this video. Thank you so much.